It's 10 o'clock and welcome all to November's Audit and Governance meeting. My name is Councillor Matthew Hall and I am the chairman of this committee. First things first, we'll do a virtual introduction around the committee room. So I'll start with councillors first. If you could introduce yourself as I call your name out, please. Richard.
Councillor Richard Biggs, member for Poundbury and vice chair. Thank you.
Susan.
Good morning, I'm Susan Cocking, representing Portland.
Rod.
Good morning, my name's Rod Adkins and I represent Ferndown South.
Janet.
Good morning, I'm Councillor Janet Dover, Coal Hill and Wimborne Minster East.
Thank you. Barry.
Good morning, I'm Councillor Barry Gorringe and I represent St Leonard's and St Ives.
Mike.
Good morning, Chairman. Councillor Mike Parks, Ferndown North.
Bill Pipe.
Good morning, everybody. My name is Councillor Bill Pipe. I represent the Litchets and Upton.
Claire.
Good morning, all. Claire Sutton, Rodwell and Wyke in Weymouth.
And Bill Trite.
Good morning, Chairman. Councillor Bill Trite representing Swanage.
Thank you, members. On to officers now. Aidan.
Good morning, everyone. Aidan Dunn. I'm the Council's Statutory Finance Officer.
Jonathan.
Good morning, everyone. I'm Jonathan Mayer. I'm the Corporate Director for Legal and Democratic and the Council's Monitoring Officer.
Jim.
Good morning, everybody. I'm Jim McManus. I'm Corporate Director for Finance and Commercial.
Heather.
Chair, I've got a note from Heather. I don't know if colleagues have seen it. She's listening, but she doesn't have access to contribute.
Okay, thanks, Jim. David Wilkes.
Good morning, everyone. David Wilkes. I'm the Service Manager for Treasury and Investments.
Ian House.
Good morning, members. I'm Ian House, the External Audit Partner from Deloitte.
Sian White.
Good morning, all. Sian White, Service Manager for Adults and Housing Finance.
Paul Ackrell.
Morning, everyone. Paul Ackrell, Finance Business Partner for Children's Services.
Lee House.
Good morning, Lee House, Service Manager supporting corporate development and legal services.
Teresa Levy.
Good morning, all. Teresa Levy, Executive Director for Children's Services.
Tony Meadows.
Good morning, all. Tony Meadows. I'm the Acting Corporate Director for Adult Social Care Commissioning.
And we have Fiona, Kerry and Megan who are helping to produce this meeting this morning. Right, members, on to agenda item number 1. Apologies, Fiona. I think there aren't any, so we'll move on to agenda item number 2, which is minutes of the last meeting. Do any members have any issues or points of clarification with regards to the minutes, please? I'll take the silence as a no, so we will then move on to item number 3, declarations of interest. Do any members have any? No. Agenda item number 4 is public participation. I'm not aware of any. Heather, Fiona, do we have any?
No, we don't have any, Chairman.
Right, before we move on to the main crux of this meeting, members, please remember to use the RTS on the sides of your screen. For those of you who are new to this process, please ask any questions that you have. There is no such thing as a silly question. There are lots of acronyms, abbreviations, etc. in this, so please do ask. Right, so on to the main crux of the meeting, which is agenda item number 5, which is Dorset Council's statement of accounts. I believe this is over to you, Aidan.
Thank you, Chairman, and good morning, everybody, and thank you. So this, as we said, the main item on today's agenda is the presentation of the annual accounts, statement of accounts. So we're pleased to present to you the accounts. This is the first set of accounts for Dorset Council, and so we're very excited to bring them here. Now, we appreciate that the papers are lengthy and at times complicated. So in order to help guide you through them, I'm going to ask Jim McManus, our Corporate Director of Finance, to guide us through them with the aid of a presentation in a few moments. And he and colleagues are available to answer questions that you may have to aid your understanding and points of clarification. Once we've been through that presentation and you've had the opportunity to ask and for us to answer your questions, we then move. The next part of the agenda is on to the views from the external auditor. So you'll have heard earlier on that Ian House from Deloitte is on the call, and he'll be presenting or giving an update on his progress in terms of the external audit of those accounts. And then once we've gone through those two items, we'll be in a position to take stock of where we are with those accounts, with a view to nearly signing them off. So I think at that point, if I could hand over to Jim to hopefully share his screen and lead us through a presentation, if that's okay with you, Chairman.
Yes, of course.
Yeah, good morning. I'm happy to share my screen. Just try and do that. Okay, are colleagues able to see that screen? Starts with Audit and Governance Committee consideration. Yes. Okay, good, thank you. Well, good morning, everybody. Thanks for the opportunity just to run through a short presentation for you. Colleagues are on the call as well to hopefully answer any more detailed questions, as Aidan has said. But what I thought I would like to do is give try and navigate you through the overall document. Some of it is, as Aidan says, is lengthy and very technical. So some of the things that I'd like to cover is just contextual, really. So it's the first year of accounts for Dorset Council, 1920. So I'd like to talk a little bit about local government reorganisation and the context that we faced locally. We'll touch on the framework, the statutory and regulatory background to our work, and that's slightly different this year given circumstances that are going on around us, so we'll touch on that. I'd like to touch on improving the accounts themselves, and again that will be slightly different this year and probably not something that we can actually do at today's meeting, so we'll come back to that at the end of my presentation. We'll dip into the performance for the year, so members will already be aware of our outturn position for last year, of our overspend, but we'd like to just run through how the performance for the year feeds into the documents in the accounts, so particularly the comprehensive income and expenditure statement, movement in reserve statement, and we'll talk a little bit more about the context for that as well. I'd like to mention how the performance for the year impacts on our reserves and how that feeds into the balance sheet. We'll mention briefly some cash flow information, and that will summarise then the four principal financial statements in that overall document. Be amiss to let the chance to talk about future prospects and our current position go when I've got the chance to do so at this meeting. I'll mention briefly the audit opinion, and Aidan has already said Ian House from Deloitte is on the call, and I'll give you a much more detailed update on that, and we'll talk briefly about other work that's still in progress. So if I talk about briefly what happened last year, as I've said, this is the first set of accounts for Dorset Council. The Bournemouth, Dorset and Poole structural changes order, that was a request was submitted 9th of February 2017, approved by the Secretary of State on the 26th of February 2018. Gave rise to the new council being established, and one at the east end of the county as well, in Bournemouth, Christchurch and Poole, on the 1st of April 2019. So reorganisation right across Dorset was 9 councils into 2, and for Dorset Council that involved consolidation of 6 predecessor councils into 1 as Dorset Council. So how did the work of the finance team influence or be impacted by that? What did we do? Well, we supported delivery of more than £10 million of staff savings. We were instrumental in costing lots of the reorganisation that went on. There was convergence of very senior posts in the organisation into a much leaner structure, and there was also convergence of support services where the majority of the savings actually occurred, and I'll talk a little bit more about that in a later slide. So we appointed a new auditor. So Deloitte, this is their second year as appointment in Dorset. It was very important to us as an organisation that we closed the predecessor councils with the same auditor that we opened the new council with, so we didn't have that change of auditor causing potential duplication of work around a new auditor coming in and having to check what the outgoing auditor had done. So important for us to have that continuity, and Ian may want to comment on that when he picks up his presentation. We managed all the financial and tax compliance issues. So we had 6 predecessor councils, for example, that all had to be deregistered for VAT, and the new organisation being registered for VAT. We disaggregated the previous county council budgets and balance sheets. So Dorset County Council had to be disaggregated between its Christchurch components and its non-Christchurch components. The Christchurch parts going off as budgets and balance sheets to Bournemouth, Christchurch and Poole, and the other part, the main part of it, coming to Dorset Council and being consolidated alongside the transferring district balance sheets and information. So a huge piece of work. 181 different budget templates were produced across the previous county council, and there's a good governance method in place for that. Finance teams worked with service managers to produce breakdowns, disaggregations of those budgets. They were fed across to Bournemouth and Poole as they were at the time, but the working team for Bournemouth, Christchurch and Poole Council, to make sure we had sign up and understanding of everything that happened within those budgets before it was all agreed. And all of that was overseen. I think we ended up with about half a dozen areas where we had to go for, I'd call it arbitration. I can't think of a better word. It wasn't formal arbitration, but oversight by the LGA. We had a finance contact there who helped us with that work, resolve those final few issues. And as well as those 181 revenue budget templates, worth pointing out about £0.9 billion worth of assets from the Dorset County Council that were disaggregated. We also supported with Legal and Democratic Services colleagues the establishment of Weymouth Town Council, and as I said there, we consolidated 6 opening balance sheets for Dorset Council. There was harmonisation of council tax through the establishment of an alternative notional amount on the 1st of April 2019, and members who were around at the time and can recall back in the midst of time, the budget paper for 2019-20 may recall a huge schedule on the back of the budget paper itself, harmonising fees and charges for the new council. Again, another piece of work supported by finance, but led principally by services across the converging council. We also built a budget for a brand new council. We built 2 budgets for the new council now, and we consolidated our treasury management arrangements, and David's got a separate report coming a bit later on the agenda. And then what happened next? So we consolidated all of our processing as a finance team onto a single general ledger system. We're running SAP at the moment. We've harmonised all our accounting policies and process. The Dorset Finance Office Group was instrumental in doing that. Another colleague on the call, Rich Ironside, led a huge amount of work across that area. So we developed the best accounting policies for the new council that we could as a result of predecessor councils converging, worked that all through with Deloitte, and they're included as part of the published financial statements. There has been and there will continue to be further rationalisation of systems as part of our convergence. We just can't do all of those things at once, but we are converging as many of our systems and as much of our processing as we possibly can into either SAP or whichever other system is most appropriate and best placed, most efficient to do that. We have and we continue to consolidate and converge our contracts and our purchasing. All of our purchasing is now done through SAP. We have a particular source to pay team that does that. Purchasing offers many of our contracts as we possibly can as a result of coming together and harmonising those arrangements. We delivered training to all of the finance staff. There was a finance training programme for new and existing budget holders to give them a refresh. We were able to deliver, excuse me, as a result of that, financial reports for the new council from the 1st of April 2019. Particular paranoia from me. I didn't want anybody to be able to say on the 1st of April, can you tell me what our budget looks like, where is it, or at the end of April how we're doing, and us not be able to do that. So really important to be able to get financial information out of the system, which we're able to do. We set revenue and capital budgets after that, as I say, for 2020-21, the year in, and we developed a new medium-term financial plan, which members have been able to access. So at the Budget Scrutiny Cafe last year, members were able to go online and interrogate our model and do some what-if scenarios in it themselves. Councillor Heatley, I remember, being particularly active and interested in that, and we'll have that option again available this year. We've also, as you'll see from the document, closed the accounts for 2019 and 20, and then towards the very end of the year, a small matter called COVID-19 reared its head, which started to have an impact on us, principally this year, less in the year in question. So the statutory context for us, we prepare our accounts, the framework within which we work, principally driven by the Chartered Institute of Public Finance and Accountancy's Code of Practice on Local Authority Accounting. The code for short. There's a new one every year. It has to be updated and informed by new international financial reporting standards that are approved. That's really the framework, the legal framework within which we operate. The code is updated by IFRSs. We also operate within various local government acts, principally Local Government Act 1972, and we also are bound by the contents of whichever are the most recent accounts and audit regulations. So 2015 are still the current ones, but there is an amendment in place at the moment as a result of the coronavirus pandemic, which we'll talk about in a moment as we go through. SIP for Service Reporting Code of Practice and various local authority accounting panel bulletins. So in terms of approving the accounts, it's required by the regulations, and it's required, the accounts are required to be approved by council or by a committee which has delegated authority from council. So that's Audit and Governance Committee in the case of Dorset Council. As I mentioned, the coronavirus amendments this year require the accounts to be approved by the 30th of November. If we revert back to the 2015 regulations, they're required to be approved and audited and certified by the 31st of July each year. So we've had a bit of a shift in the timeline allowed this year for us. Quite what will happen next year, I'm not absolutely sure yet. It's likely, I suspect, that we'll be somewhere between the 30th of November and 31st of July, but certainly the amendment regulations are the reasons why we're having this committee meeting in November rather than July, as would have otherwise been the case. So in order to get everything ready for the 30th of November, the regulations require that the Section 151 officer, that's Aidan, he certifies the accounts and that they are made available for audit and for public inspection by the 31st of August in time for the audit to start, and that's part of the whole programme of delivering assurance to those of you, Audit and Governance Committee members and the Council who are charged with our governance, and to taxpayers for value for money. So I just thought it was worth reminding ourselves of some of those things. I suppose part of it is regulatory and it's a little bit dull, but also some of the first three slides. I'm really proud of some of the work that my team has done in order to get us to the situation that we're in. And whilst we'll go on and look at some of the observations and recommendations in the external auditor's letter shortly, massively proud of lots of the work that my team has done and in very difficult circumstances. So a massive thank you from me to them. So in terms of our performance for the year, as we'd said already, we'd overspent by nearly £5 million during the course of the year. We'd known quite a lot of that was coming for quite some time. We were forecasting an overspend during the course of the year, and we'd reported quarterly and monthly to our portfolio holder and also through to Audit and Governance Committee that was coming. So if I then kind of talk through how that 5 million rolls through the rest of what you see here, because it's difficult to pick up some of the management accounting information, which is what we see in terms of the comparison of budget versus actual and the 5 million overspend compared to what you see in the accounts. So the first bit that you see is the comprehensive income and expenditure statement. And as I said, it's prepared on the same basis as a company because it's driven by the code, which itself is informed by international financial reporting standards, which lots of public companies are also governed by. So that statement is over 2 pages in the accounts. It includes all costs and revenues for the service line as shown, and it comes out with different figures from the ones that we'll see in our management accounts, typically because it includes things that are required to be shown under international financial reporting standards rules, such as depreciation, other things that you wouldn't normally charge against a budget holder's particular budget because they are not controllable by that budget holder, but they are still part of the operating costs for that division. The format is predefined by lots of parts of the code, but it also broadly aligns with our services. So when you're looking through lots of lines on the comprehensive income expenditure statement, you'll recognise parts of the organisation of the council, so adult services, children's services, and so on. It shows that the net cost of delivering our services is around £400 million. It then below that shows other operating items, so things that aren't service line specific, that can't be attributed to a particular part of the organisation. It also then summarises our funding, so it looks at corporation tax, non-domestic rates and so on, any general grants that we might get, such as new homes bonus. It looks at capital grants as well. We then look below that line at revaluation and actuarial gains and losses that are required to be reported under accounting rules, and our bottom line of £34.7 million of net expenditure to run the organisation according to those rules during the year. So the comprehensive and income and expenditure statement is compiled on an IFRS basis, as I say, like a company, but local government isn't a company. It has council taxpayers and it has different types of funding as well as counting tax, and some of our accounting arrangements need to be implemented in such a way as to reflect that. So the next statement in the accounts after the after the balance sheet is actually the movement and reserve statement, and it shows the movement in the performance for the year and how that's split out between reserves. It's in a very summarised format this year because it would otherwise duplicate lots of the information that is in the individual notes that shows how some of the accounting arrangements require things to be moved from the line that comes in from the income and expenditure statement at the top of the movement in reserves, how that's required to be distributed between each of the reserves so they don't impact on the general fund. And the general fund is effectively, if you wanted to think of it in a different way, it's the profit and loss account of the council, which is owned, for want of a better term, by local taxpayers. That's the bit of the organisation's money that is available to support service delivery. So that's supported, as I say, by detailed notes and the analysis of the general fund, which started the year at around £15 million and closed at just under £31 million, is shown in note 52. So a little bit more on the context of our performance for the year, the 5 million overspend. Well, the council had predicted an overspend throughout the year. As I said, at one stage it was as high as £12 million potentially that could have been, but mitigating action was taken. We managed to reduce that. Additional funding was put into frontline services following reorganisation that we talked about earlier, and some of the savings that the organisation made in terms of streamlining its senior management structures and its support services, converging systems and contracts and processes. And more action has followed since 1920. So if we look at the development of the 2020-21 budget, the year that we're in at the moment, as a result of the overspend that we knew was coming in 1920, we've added more money into children's services. For example, the budget this year, 75 million, an increase of 10 million on 1920. And for adults and housing, 122 million, an increase of 8 million over the previous year. And by comparison there, I'm having trouble sharing my screen and seeing everything on it. I can't quite remember off the top of my head. 9.8 million is the budget decrease for corporate development. So you can see clearly there where the majority of the convergence savings, cost reductions were able to be achieved, and principally in the staff cohort. So what did the performance for the year do? Well, it impacts on reserves. Any overspend falls to be financed initially from the general fund, but as well as having an impact on the general fund, part of bringing 6 predecessor councils together into Dorset Council meant that not only were we able to save money, reorganise, rationalise our revenue budgets, we were also able to review and rationalise our reserves, and we've done that. We were each providing different reserves for different things. We've harmonised our approach to risk management and things that we provide reserves for, and we were also able, as a result of the change to the dedicated schools grant arrangements during the course of the year, release a reserve of around 15 million that we were previously holding in case we needed to support the overspend on the high needs block. That wasn't the case, so some of that reorganisation and rationalisation has helped there. So we were able to effectively fund our overspend for the year from other earmarked reserves, but it was an in and out into the general fund. So we closed the year at £28.2 million, which is near the upper end of the general fund's operating range. It has a range. So notes 51 and 52 analyse the movements in reserves and the general fund in the year, and it's fair to say we continue to keep a review on our reserves in light of the 2021 challenge. So as reported in the balance sheet and in the movement and reserve statement, the general funds just over 28 million, other earmarked reserves about 86 million, but they're earmarked for a reason at the moment. And as I say, as we progress through this year and we understand the impact coronavirus has on us and how much reserves we actually need to underpin this year's position, we'll be able to inform our financial strategy for next year, for use of reserves next year and in the future. Moving on then to the balance sheet, the result of establishing Dorset Council was an organisation with total assets of nearly 1.3 billion. So note 22 shows the analysis of movements in the year of most of that. So that's our property, plant and equipment note. Doesn't show investments or current assets, but that's the majority of our asset base is long term. Other highlights from the balance sheet, our longer term borrowing has reduced by around 21 million. Borrowing overall is down by 15 million, that's long and short term, and there's an analysis of the maturity of our borrowing in note 39, and as I say earlier, David's got a separate report on treasury management on the agenda, which he may pick up borrowing in later on. Our leasehold obligations continue to reduce. They should really only go one way, reflecting our policy generally in later years as a county council, and then that moving into Dorset Council, that it is generally cheaper for us to borrow and buy than it is to lease, pay the implicit rate of interest in any lessor arrangements for us. We also have 51 million of capital grants that are to be applied to our current and our future capital programme. That's money that has come in principally from government for particular programmes of work that they fund us to carry out. We have other unusable reserves which reflect some of our accounting or other statutory requirements that aren't available to support service delivery. And probably just I've tagged it on there as a bullet point, probably should have mentioned it earlier, because it's the first year of Dorset Council. There isn't a previous year for us to compare with on any of our information really. So as it's the first year, we've generally tried to do an opening balance sheet figure and a closing balance sheet figure, so you can still see movements in the year, but as I say, there wasn't a previous year to compare with. Last of the four principal primary financial statements, cash flow, just summarising some points there. 10.3 million positive cash flow from operating activities, nearly 19 million outflow from investing activities, principally use of capital receipts during the course of the year that had been banked over previous quite a period of time by predecessor councils. 35 million positive cash flow from movements in short-term lending and borrowing in net terms. 110,000 net outflow in longer term financing arrangements, net outflow on PFI for our two contracts there, closing balance of cash of 31.5 million, an increase of nearly 11 million pounds. And again, David might want to pick up some of those as part of his treasury analysis later. So that's probably all I wanted to say about the primary financial statements. Worth just picking up future prospects, so reminding ourselves of where we were and where we are. So the accounts for the year we are considering was the last of a 4-year spending review. 2021 was a 1-year settlement for us, and I think we all know now that 21-22 will also be a single-year settlement. I think it's important to note that government has set out its intention still to offer multi-year settlements as soon as it possibly can, but it's just not feasible to do that at the moment. But for us and other local authorities, other government departments generally, there's still significant uncertainty over lots of our future funding. Quite a bit of it is 1-year rollover, including things, for example, like the improved Better Care Fund. The context for budget setting, which affects obviously our future prospect and others, is that net public sector borrowing in excess of 250 billion for the first 6 months of the year. Total government debt now exceeds 2 trillion. So a really difficult situation for government to be able to offer flexibility or additional funding for us. So that's all valuable information which is fed into our budget strategy for this year and into the medium-term financial plan. We're also continuing to feel the impact of coronavirus, and it goes without saying really that the future remains very challenging for us. Just 2 slides left to go. Audit opinion I'll just touch on briefly, but Ian will have much more to say on this from the external auditor's perspective. We hope to be unqualified in our accounts, except for our value for money for children's services. Members might remember that more than one of the predecessor council's accounts were qualified in terms of the financial statements as well, particularly around asset valuations. I'd like to think that we've dealt with all of those points this year. There is more learning for us as a result of observations made by the auditor, but I think the previous qualification issues have been dealt with. There are also findings that we've had communicated to us already. Some of those are summarised in the audit position, the ISA 260 position statement. So I'm happy to pick up on any of those in terms of the detail of the work that's been done. But we have reflections on those. We've offered our comments on those, and as I say, Ian will pick up more separately. My last slide, the auditor will report to you on work that's still in progress before we are in a position hopefully to sign off before the end of this month. We'll also talk to you about timing for the audit opinion, any audit issues that are requiring attention. We are, as I said earlier, still developing the 21-22 budget strategy and the medium-term financial plan, planning for the scrutiny cafe sessions on the 27th of this month. We are finalising the capital programme and we're continuing to monitor this year's spend and the savings programme's development as they get put into place to support next year's medium-term financial plan and budget and the transformation programme. So I hope that was helpful, and I'll leave it there and be available just for any questions, members. I'll stop sharing my screen as well if I can work out how to do it. Thank you.
Thank you very much, Jim. Before we move on to Ian's House's report, members, you've got some questions coming in. I want to do the general questions at the end, but if you have any points of clarification that you want answered from Jim or Aidan at this point, can you please just put it in the screen or call out?
Yes, Chairman. I've got a couple of questions for Jim.
Okay, Barry, carry on.
The general reserves are 28.2 million. We also talk about other earmarked reserves of 86.2 million. Can you just clarify what these are?
Yes, thank you. Can you hear me okay?
Yeah, fine, Jim.
I'm having trouble. Well,
anyway, thank you very much for the presentation. It was a very good presentation.
Thank you very much. It's difficult to strike the right balance with these things, isn't it, sometimes? So the other reserves are, there's either note 51 or 52, I think, which covers earmarked reserves, and there's a general heading there for them. So we have a medium-term financial plan reserve of 31 million. So when we opened the MTFP for this year, for example, the 5-year budget gap was 31 million. So there was money set aside to support that. But we also have insurance reserves, for example, topical after this weekend's activity, perhaps. We have PFI reserves that are put by, and we also have reserves that are to support, they're there to support particular risks and mitigations. There is, we can produce a level of analysis for you if you wanted to have a look at those beyond this. But yes, they support particular purposes. There's also quite a bit of money in reserves that is grant income, for example, that has come in during the current year that hasn't been spent, but because it doesn't have to be given back, it's not ring fenced or earmarked in any particular way. It will then move through the income and expenditure account and go into a reserve. So it's not a reserve in the truest sense of the word, but it is there to support future services of the council. Those will be things that we are spending on this year.
Yeah, so really 28 million isn't a true reflection of what our reserves are. In actual fact, from what you're saying, it sounds as though there's more reserves there than what we're actually declaring.
Well, no, we're declaring them, but they are analysed with different purposes. So the general fund is 28 million, but there are other reserves there, and they're set out in note 52.
Okay, I would actually like outside of the meeting more analysis of or a breakdown of what these earmark reserves are.
Yep, we can do that.
If you could provide that, Jim, that'd be good.
Certainly. Yep.
Thank you, Chairman.
Thank you, Barry. Councillor Biggs, you have a clarification question.
Thank you, Chair. I've lost my page. Well, I thought it was on page 70, but it was to do with, yes, it is contingent assets. And just to explain, it mentions around section 106. Can you just clarify, is that money that we've got, or we may not realise all the amounts from the various schemes, etc., planning obligations? Just a bit of clarification, really, please.
Yeah, it's money that we've not received yet, but it's money that is an asset which is contingent upon all of that work going ahead. So if those things proceed to their fruition, then yes, that's money that will flow to the council for those purposes as set out in the 106 agreements. So it's not ours yet, but it will be coming our way if everything proceeds as we think it will.
Thank you. Thank you.
Councillor Sutton.
Thanks, Matt. I think this is one of those idiot questions which you said were permissible. It's in section 12.4, where it states that current assets have reduced from 62 million to 5 million. I don't really understand that. You know, this massive reduction. If someone could clarify that for me.
Yes, I'll probably is Rich Ironside on the call. I might ask for Rich. I think some of that is to do with the way that we have classified the collection fund figures between the opening balance and the closing balance. So they're just movements of things between two different areas in the balance sheet. I think if Rich is on the call, he's closer to the detail on that than me.
Yes, good morning, everybody. Richard Ironside speaking. Yeah, as Jim's explained, there are different ways of accounting for the collection fund. So there's a movement in the debtors and payments in advance of a positive position of 78 million, and a reduction of creditors and receipts in advance of about 89-90 million in relation to that. So that's one of the big changes there. But there was also a reduction of temporary investments of about 52 million. In which all short-term investments reduced. So there's a brief explanation there of how the net assets have reduced over the year from 62 to 5 million.
Are you okay with that, Claire, or do you want to come back?
No, that's okay. Thank you.
Jim, I'll just ask this one as the right slide is up on the screen. In red, you've got £4,000, which is under the Director's Office income, which I believe is a credit note for a charged invoice to BCP for LGR. Can you confirm that now all LGR costs have been paid out?
I can confirm that I think all LGR costs have been paid out. So some of that will continue because there are arrangements in place between us and BCP how we manage certain things as a result of local government reorganisation. So the dividend from Trix, for example, is one of those. There is a further piece of work in train at the moment around town and parish council assets. So there's some legal work in place on that because we weren't able to finish all of that work in time. So more will flow from that. Our budget as predecessor authorities for bringing together costs for bringing together the new council was underspent by about £300,000. So there is some money still in one of those reserves. Back to Councillor Gorringe's question, what are all those reserves for? There's about 300,000 in a reserve that wasn't spent on LGR, just in case we continue to need some of that as a result of things that we find out during our early stages of existence.
Thanks, Jim. Councillor Pipe, is your question a general or a clarification one?
It's a general one about uncollected revenue.
We'll do that one at the end then, okay, Bill?
Yeah, fine.
So if we could now move on to Ian, can you do your presentation, please?
Thank you, Chairman. Firstly, committee, apologies. We were hoping that by this stage of the year we would have actually had everything finalised in order for you to scrutinise a finalised version of this report. Unfortunately, as with all of the audits across the country, COVID has caused us a great deal of more difficulty than we may have anticipated, and things are running on. Very few audits are actually signed at this point in the year. I'm pleased to say this one is on track to be signed by the end of November, but there are a few things that we're still working on, as has been alluded to by both Aidan and Jim. I would like to echo Jim's comments earlier on. I think there were a huge number of potential problems in consolidating the accounts to start with, and in producing such a complex set of accounts in the environment presented by COVID. So I'd like to add my congratulations to the finance team for the accounts that they put together, and in no way is the reason that we're a bit delayed in finishing this down to them. There were some complications around payroll reconciliations and bank accounts, which we've noted, but again, they've already been addressed in the current financial year by consolidation of bank accounts and payroll onto a single payroll system. So again, there were some issues, but generally a very good set of accounts put together in the most difficult of circumstances. So I really must commend to you the work of the finance team before I commence the report. In terms of the report, members, what we set out here is the sort of status of where we're at. So you will see on page 3 of our report a number of areas where we're just completing our work. Some of that has progressed since we issued this to you, but there are still little bits and pieces that we're still finalising, and I'll explain what that means at the end. We've identified a few issues in terms of numbers, but nothing that's material and would cause any issues with the opinion on the accounts. Okay, I'll just wait for that to come up if that's helpful.
Are you able to get the report up on screen, Fiona?
I'm just waiting for Kerry to share it. If you look, hold on a moment, please.
Okay, thanks, Fiona.
Which report is it that you want her to share?
Which one do you want, Ian? Your specific one?
Yes, the Deloitte report to Audit and Governance Committee for the year ended 31 March 2020.
There you go.
Perfect.
Thanks, Kerry.
And if we could scroll to page 3, that would 3 on ours, yes, so a bit further down. Perfect. Thank you very much. So you'll see that we envisage issuing an unmodified financial audit opinion, which is obviously the news you're looking for as members. It means we're happy with the numbers within the materiality that we've set for the audit. Your accounts disclose a couple of uncertainties, and they are in relation to the valuation of buildings, both the council-owned buildings and the buildings within the property assets within the pension fund. These are disclosures because at the 31st of March, obviously COVID was going on. There was more uncertainty around property valuations than at a normal sort of year end, and therefore the valuers have disclosed those. You've disclosed them in your accounts, and what we do as auditors is when people are reading our audit opinion, we say you should be aware of these disclosures in the accounts and just point the reader to those. It doesn't constitute a qualification of the opinion. It's just saying to anybody reading the accounts, you need to be aware that there is this uncertainty around property valuations, which is greater than normal. The valuers are not saying that their values are wrong and that there's a material error in them, but they're just pointing out to the reader clearly that everybody knows the market was a bit strange at the 31st of March because of COVID, lack of activity. So there was less volume going on in the market, and that gives a greater degree of uncertainty around those valuations. So I think that's an important point, but it's all there. You've disclosed it. We're just referring to your disclosures that are already there. Those of you who were at this committee when we signed off the accounts for the County Council last year will recall that there was a qualification in relation to value for money in relation to children's services. And at the time I said, given the scale of the challenge, although there was a lot of good work going on, that was likely to continue into the new authority, simply because what we're looking at is whether the arrangements were in place throughout the year. And therefore, if you put something in place, say in February 20, throughout most of the year, those arrangements wouldn't have been in place, and therefore we would then conclude that they weren't in place throughout the year. So that's important. I think a lot of progress has been made. You as a committee have asked internal audits to do a lot of work on your behalf, and there are a number of issues still coming out of those internal audit reports. So whilst we recognise the progress has been made, the qualification in relation to the arrangements around securing value for money in children's services remain for the current year. That's an important point that we bring to your attention. I'm going to move on to the next page now, if I may. There was one query from an elector, but that was an information query which has been resolved, and we do not see the need to issue any of our or use any of our other audit powers during the year, which is good news from that. We are not required to do sample component testing for the whole of government accounts, so the National Audit Office asks some auditors of local government to do additional work on their behalf, but we have not been informed that they need that for yours, so that's good for us as well. COVID-19 has had a big impact on property valuations, pensions and going concern assessment, as I've already said, but we're happy that you disclose what needs to be disclosed in relation to that. So I'll move on to the next page, if I may. That's just a summary of your responsibilities. I think we can move on from that. It was in the audit plan as well. The key point on this next slide is our materiality. So we set this number called materiality, which is 14 million by the time we've come to the end of the audit. It was slightly lower than what we set in our plan. And this is if a balance in the accounts was wrong by this amount, we'd say, well, that really would mislead the reader of the accounts. Now, that may seem to you to be a large number. It is a pretty big number, but in the context of the assets and liabilities of the organisation and the expenditure, really we're saying it would have to be wrong by quite a big number to really change your view of the financial health of the council, and that's the number that we use. But if we find an error greater than 700,000, we do report that to you, because we say you ought to be aware of that, but it doesn't change the reader of the accounts view if you don't change that number. We obviously add all those errors up as well, just in case that cumulatively they would change the view of the reader. And again, we haven't found anything that adds up to be a material error in the accounts, which, given everything that was going on, the difficulties of bringing together the former councillors and everything is a great achievement, as I said at the beginning. Move on from that slide, if I may. Here we outline the significant risks that were identified for our audit. The first one was the aggregation and disaggregation of balances, and we've completed our work in relation to that, and we have no major issues on that. Property valuations, it was a complex one this year. You had 3 different sets of valuers carrying out valuations on different assets, one for the farms, one for the former district assets, and one for the former county assets. So we had our property experts review all of those valuations, and again, we're happy with the methodology that's been undertaken in relation to those property valuations. We're just doing some final work in terms of the information provided to the valuer to make sure that they were provided with the correct, say, floor areas for buildings that they were valuing. The next one is around completeness of accrued expenditure. So at the year end, there's an opportunity to accrue for things where you perhaps haven't had the invoices yet, but you've got to pay for them. Some invoices will cover the year end and go into the new year, and you have to decide how much of that goes into the current year's accounts and how much goes into the next year's accounts, etc. And that's an opportunity to manipulate the accounts. If you're in management, you can sort of make estimates that perhaps are overly generous or maybe not as significant as they ought to be. And that's a key area of manipulation that we look out for and we review. And we're just finishing off a testing on that, but so far there are a few errors that have come up, but nothing material in terms of that. We'll come on to those in terms of the points later on. The pension fund liability, again, a very complex balance that appears in your balance sheet, is a huge liability number. It's met by a reserve, so it's not It doesn't impact on council tax. What impacts on council tax is the amount you actually pay out each year, which is determined by the triennial valuation. That number goes through the comprehensive income and expenditure statement. But in the balance sheet is this big liability, supposedly being a calculated share of the overall pension fund liability. As I say, it's matched by an equal reserve, so it is a big number. It gives you an idea of what it is. That number is built up by a huge number of assumptions around things like interest rates, how long somebody might survive after retirement, increases in salaries between now and retirement, and all sorts of different factors. And what we do is we review those assumptions and make sure they're reasonable and that that number is a reasonable number to represent your share of the liability. As I said, it doesn't impact on council taxpayers, but it is important for you to understand the overall liability on the pension fund. Management overrider controls, again, is an assumed risk in all audits, where we just say management has the opportunity as senior people within the organisation to manipulate things through journal testing, for instance. We do a sample of journal tests using computer-assisted techniques to identify which journals may indicate management override. Again, with no problems arising from our work on management override. And value for money, we obviously identified that there was a risk there from what we had identified last year. And as I said, last year was probably going to continue this year, and so we did some work on that. The following pages outline the detailed work that we did on each of those risks. I won't propose to go through those in detail. You've had a chance to read those. As I said, some bits and pieces to finish off, but nothing that should give rise to a material issue. What we will do is, when we've completed our work, we'll produce a report that says this was outstanding in the report we provided the committee. This is where we're at. This is the conclusion, just so as that's finalised. And you can see the conclusion of all of those things. Thank you. If you could just keep going through for a minute, that's fine. Keep going. Thank you. Brilliant. Great. I think I've covered off the value for money, which is covered on these pages, but as I said, there were issues coming through from the Ofsted report. Lots of progress has been made. Ofsted have come back and done some re-inspection. You've done quite a bit of internal audit work. And whilst we acknowledge the progress has been made, we still think that overall the except for opinion continues. Carry on from there for a minute. We can come back to that. I'm sure there'll be some questions on it. Just on that slide, sorry, just back up a tiny bit. Thank you very much. So an unmodified opinion is expected, but with those emphasis of matter that are described in the middle box there around emphasis of matter paragraphs on property valuations. We have not identified a material uncertainty related to going concern, and a lot of that comes back to both the medium-term financial strategy that Jim has explained to you, but also the level of reserves that we've considered as well in terms of how that will help you cushion some of the difficulties going ahead. Obviously, there's uncertainty around COVID-19, the changes that, we still uncertain exactly what's going to play out around that and whether there are more lockdowns to come and the impact of that and the government funding that will flow. So there is that uncertainty, but overall, we felt there was no material uncertainty in relation to your accounts compared to many others that are struggling. We think you were in a reasonable position. Value for money we've talked about, and annual report we've covered off as well. So if I can move on. Just in terms of the annual report and narrative report, we asked for some more specific disclosures around COVID-19. I think at the point the draft accounts were put together, obviously things were still developing. As that's now become clearer, we've just asked for some updates to that, and that's been accepted and done. And in terms of the annual governance statement, there'll need to be a little tweak to just acknowledge where we've come from on the value for money opinion, but otherwise that's fine. There's quite a lot here in terms of the impact of COVID-19. You would expect us to at least say something about it, given the impact it's had on the country. It has had quite an impact. Obviously, we're doing the whole audit remotely, so we're relying on technology in order to work with the council and get the audit done. I'm pleased to say, that has been possible and has worked well, but it has taken longer than we would have expected. And obviously, as I said, this is playing out across the country in terms of many accounts still not signed. I think we're in a very good position to get yours signed, but not as far forward as we would have hoped to have been by today. Thank you. I've talked about the property, plant and equipment and assets within the pension fund, so I'm happy with that. That's all fine, thank you. I'll move on from there. I've covered off the purpose of the report, really. I think that's self-explanatory. Thank you. If we could move on just to the next page. So control findings, we've raised a number of control findings. The first is around journals. So these are manual adjustments made to the accounts usually to bring things in from feeder systems, for example, or when you get valuation reports to update valuations in the ledger. We just ask for the more significant journals for greater evidence of review of those by somebody more senior. I think that's agreed there. We've obviously raised the point around value for money and the need to just carry on with your action plan. It's a bit of motherhood and apple pie, really. I think you know that. We're just pointing it out. So we can move on to the next slide. So I think as part of the faster close down, management have made a judgment around, we expect there'll be a certain level of accruals that we perhaps haven't specifically identified at this stage. They put that in. It is a valid way of doing it. We like to see it obviously be more specific if we can. I think we'll talk to Jim and the team about that. I think they felt it was a bit harsh given that they were just using this as a means to close the accounts. We haven't come up with a material difference from it, and they think it's reasonable. But we'll follow that up for next year and agree on a way forward. But I'm not hugely worried about it. Revaluations. We've raised a point, a number of areas around that, and I think, again, your approach will be simplified next year when you have a single valuer rather than 3 different valuers. That should be straightforward. I'll move on to the next page, please. Number of IT findings. We often find IT findings around access controls, password controls, etc. We've raised those, and we haven't detailed them all out for you in this report. Management can provide them should you wish to see them, but there's a number of things that can be improved on there. I would say that's the case across most of our audits. Our IT specialists usually find a number of things to raise. I mentioned at the beginning some of the difficulties around payroll and bank reconciliations, largely due to the number of systems being used or the number of bank accounts in place. I think a lot of that has already been addressed, as I said earlier on. Some of the non-trade accruals in terms of updating the spreadsheet that is used, it's just around a review process. We've asked for a bit more detail on that, but again, that will be picked up as part of the close down of discussions between us and finance for next year. The next page, please. Further things around accruals, just around the period. Again, this is part of the faster close down. I think we'll pick this up again in discussion with the finance team and Jim around those things that you might estimate as part of the process. And if we have an early discussion around that, I think these will be resolved for next year as well. So we've raised them, but I think by the time we come to next year and more business as usual without the disaggregation, I think we'll agree a reasonable way forward on these. Just around the valuation dates and disclosures around that. One of the disclosures SIPFA recommends is which assets were valued in which year. Just so as you can see over the 5-year period, the value in each year and which ones have been covered off each year. It's not a critical disclosure, but we think it does add value, and we'll talk to the finance team about adding that in for next year, but we're comfortable it's a low priority recommendation. We just had some difficulty around disaggregation processed assets, but the process was robust. I think it was just some of the underlying records, but we're happy that we've got to the end of that piece of work now. Next slide, please. Nothing to raise there. This slide summarizes some of the adjustments that we've identified. In terms of pension liability, there are a number of legal cases that have been going on around potential discrimination within schemes, one of which is called the Goodwin scheme. We've looked at that, and again, it's not a material adjustment that would be needed, and we're happy that is not adjusted. Likewise, in terms of accruals, some adjustments there, but none of which are material to the accounts. Because if you remember, I said materiality was 14 million. The net impact of these again is only 3.8 million and therefore not material. And the effort and everything else that would go into adjusting the accounts for these wouldn't be worth the cost and time involved in doing it. You as a committee have to be comfortable with that as well, but I don't think in not adjusting these you are in any way misleading the reader of the accounts. They're materially correct and give a true and fair view. And there was one classification issue that we picked up as well. As I said, there might be some other bits and pieces that come up. If they come to a material level, we would bring those back to committee, but I wouldn't envisage it at this late stage that we end up with that. If I could move on to the next slide, please. Couple of disclosure things that we've just already talked about, so I don't think there's anything material there. The next slide, please. Just reminding you that obviously if we pick up fraud during the audit, we will raise it with you. If you're aware of any fraud that could be material to the accounts, then you should raise it with us today. If there's anything that perhaps we might not have been aware of to date, usually committees nod and say no, there's nothing, but I have to ask you just as completeness on that issue. If I could move on to the next slide, please. Just an update on where we're at with fees. Nothing particularly to bring to your attention there. And the next page, please. Just to point out that I think usefully, given where you are with Children's Services, that the arrangements for our value for money work are changing. There will no longer be quite such a blunt opinion as we currently give, which is sort of except for this or with the exception of that. It will be much more of a narrative report for next year, which will give us an opportunity to talk both positively and to raise some of the challenges in a more narrative report, which I think will be both more interesting to you and of more value to you. It will be more work, as you can imagine, but I think that's a very positive development, and the latest guidance on what we're actually going to be doing only came out a couple of weeks ago, so we're currently working through that in terms of how we will do it, and we'll come back and tell the committee more about that at a future meeting. And I think that concludes the report. There's a little bit on changes to external audit, but nothing critical for today.
Thank you very much, Ian. Right, members, we've got obviously Ian from Deloitte, we've got Jim and Aidan and others from the finance team. We've got Gary Suttle, portfolio holder for finance. We got officers from Children's and Adult Services. So the world is your oyster, as it were, when it comes to questions. So do use the chat bar for your RTS, and we'll start with Councillor Pipe, please.
Thank you, Chairman. Just a quick note to Jim, you know, that you should be justifiably proud of the work that he and his team have done on putting together this end of year accounts. I'm a bit concerned about uncollected revenue, particularly council tax. What percentage of the uncollected revenue is owed by council taxpayers, and what measures are Dorset Council taking to recover these debts?
Do you want to take that one, Aidan?
Yeah, hi everyone. I'm not sure if a colleague can quickly look up the answer. I'm not sure if it's contained within the accounts, but no, the general point about collecting council tax at the moment in COVID, it's exceptional times, and so so whilst we're tracking sort of the number of people that aren't paying and the debts that are building up, we're not actively sort of assertively pursuing that, given the sort of economic frailty at the moment, and in response to COVID, and so we've got to wait until sort of normal times return before we get really sort of back down to sort of heavy pursuit of outstanding debts on that. Jim, I'm not sure if you've got any actual numbers to hand, or whether that's something that we can provide outside of the meeting.
off the top of my head, I don't know the total level of debt, Councillor Pipe, but we can get that to you. If I say to you where we are so far this year, so anything that has occurred, any debt that we've got in a previous year is completely provided for. So if it were to be written off, there'll be no impact in the organisation's accounts because it's provided for. That doesn't mean we don't go after it. We do. I think Aidan's mentioned at the moment we've stepped down more active collection policy at the moment, not least of all because the courts aren't open to pursue any of these matters at the moment. It also might sound draconian if we say we're going to take sanctions against people, but sometimes that actually people find that very supportive and very helpful to be referred to a collection agency that will help them put a plan in place, as well as our own Revs and Bens teams, both at Dorset Council and Stour Valley and Poole Partnership. Where we are in terms of this year is that we are behind with our collection rate. So our you'll see a bit later on the agenda, there's a Q2 finance report that went to Cabinet. We are forecasting at the moment that around £13 million worth of council tax and business rates that we're due to collect this year could be at risk because of difficulties in both businesses and individuals paying. We're not at that 13 million yet, we're below that, and we're probably around about 6 million for council tax, but close to the 3 million for business rates. So we continue to keep an eye on that as it goes on. We know the arrangements that government has put in place will mean that we can deal with any deficits that we get on our collection funds over the course of 3 years. The position that Dorset Council has taken so far is that we will probably deal with all of that. We will provide a reserve to deal with any collection fund that we've got this year. That's what the 13 million assumes. So although we can reclaim it, set it off over 3 years, we'll deal with the financial impact of it this year. So 13 million is in our forecast for this year. At the moment, we're not predicting that we're going to need all of that, but we just don't know what will happen with how difficult it becomes for businesses and individuals to continue to pay those figures. But we can provide a more detailed figure on the total debt and the provision that we've made for it outside of the meeting for you, Councillor Pipe.
Okay.
Thank you for your comments about the work of the team. Gratefully received. Thank you.
They're called kind words, Jim.
Did you want to come back on anything, Bill?
Just the 13 million that, well, that's for this year, isn't it? So I can't comment really on last year's figures. So this year's figures are unrelated to my question, really, Matt. So
okay.
If Matt or Aidan can get back to me with a figure for uncollected council and business rates, that'd be great for last year.
Yep, we'll do that. Thank you.
Jim's nodding his head at that one, so that's great. Thank you, Jim. Councillor Sutton.
Thanks, Matt. Two completely separate things, so I'll do them one at a time, shall I?
Yes, please.
Yeah. So the first one is, yeah, obviously massive credit, because from an accounting point of view, this is a complete leap into the unknown, isn't it? So I think it's quite an extraordinary piece of work, and what Ian House is telling us is that you've done a really, really good job under really difficult circumstances. So I don't want to be too harsh about this, you know, given that this is sort of this is the baseline, this is where we start. But I mean, I suppose a slight concern that we underestimated spend in adults by nearly 10%, and we underestimated spend in children's by 13.5%. Now I can understand why we would be quite a way off, because you know the complexity of the amalgamation and everything, but is that something that we should feel concerned about, or should we feel that that's just a sort of slippage because we were in new territory? Does that question make sense?
It does. Aidan, Jim, do you want to come back to that?
Yeah, if I could respond initially, I think it's a really good question, and we need to. And we're talking about last financial year and not the difficulties of this financial year and the unexpectedness of COVID. I think it's a good question in particular because as we went through establishing the Dorset Council, children's and adults didn't necessarily have the same degree of complexity of the convergence of budgets, because we weren't we were disaggregating Dorset County Council and handing over a part over to BCP rather than necessarily bringing together services. But nevertheless, I think what, and we've touched on this in the committee last time, what we are not good enough at yet is around the demand forecasting, is about what the level of demand is. But at the same time, we have to recognise that we can have to take on a family, for example, within children's services overnight. We take responsibility for a number of children, and suddenly our bills, our cost for the year can go up by £1 million. There's a huge degree of volatility. So when we went through the budget setting exercise to set the budget for this first year of Dorset Council, we clearly didn't put enough in for adults and children's. We tried to make a correction for that, setting the budget into this financial year. But it's an area we continue to grapple with, both in terms of getting our demand forecast when we're setting the budget right, building that degree of volatility, and as part of the challenge of that is how do we afford it, how do we fund it, and that brings our strategy of trying to make the corporate support services as efficient as possible to free up funding for frontline services.
Thanks, Aidan. I don't know if Teresa or Tony Meadows wants to make any specific comments about their departments with helping to answer Councillor Sutton's question.
I'm happy to comment. Oh, sorry. Thanks, Tony. I'll take the privilege of going first. Happy to comment, Chair, and I'd also like just to reflect some comment on colleagues' message about other than or except in the case of children's services, because I would just really want to remind colleagues that we've just had an SEND visit which talked very positively about the partnership arrangements and the good value that was bringing across children's services just last month. So glad to see movement there. But I think, as Aidan says, absolutely, we know that the new council was grappling potentially for the first time with a real comprehension of adults and children's services needs, and so the adjustment for that last year was certainly essential. As I arrived at the latter stages of all of that, concerned really about the need to really profile carefully. We know children who are on child protection plans and who are part of early court proceedings are likely to become looked after, so we can profile that very clearly now. Our challenges, however, are around sufficiency, as we've declared previously, both in terms of residential care and in terms of sufficient placements for SEND. And so those two particular areas are the areas of significant pressure and spend, and it's going to take a couple of years yet as we get that sufficiency improved to see those costs come down, whilst we are seeing the level of demand managed through our new arrangements.
Thanks, Teresa. Tony?
Thank you, Chair. I think obviously sort of just following on from the points that Aidan has made, projections are quite difficult at times because, again, in terms of the qualification element, in terms of when somebody becomes eligible for adult social care services, that can have a factor in terms of obviously self-funders whose assets deplete, etc. I think one of the things I would say is over the last 2 years, we have actually as an authority come a very long way. So the situation that we are in now to actually be able to inform a lot of the the positive steps that were taken in the formation of this year's budget, which did recognise some of that element of lack of projection. But also since that, we've managed to come up with obviously a lot of work through public health and our system partners around actually understanding the data around long-term care needs within the county. So a lot of work on population health management, which then begins to give us a lot more to actually see where some of our pockets of future need will lie across the county. And that really is going to put us into a much better place in terms of building those budgets for the future and understanding the population in a much better way. So it is a case of, yes, very difficult sometimes to map and project everything because obviously it is a means tested service. And also, it is looking at the fact that sometimes things in terms of where health goes, and that's something we will be seeing obviously as we move forward because of COVID in the future, obviously eligibility, etc., will be impacted. So more people may well be coming into our doors because their needs are greater perhaps than they would have been.
Thank you, Tony. Claire, I don't know if you wanted to come back on any of that or move on to your second question.
Yeah, I would like to come back briefly, actually. I mean, obviously the ongoing pressures of COVID is a point that I've made before and that we're all aware of. I think my worry is, and this isn't a criticism of anybody remotely, is that it feels like year on year, you know, we're always overspent in children's and adults. And if we're looking at the, you know, we'll be looking at the Q2 numbers a bit later, and we're looking at around 10% again there. And so this isn't a criticism. It just, as this seems to happen year on year, you kind of feel like we're putting the numbers in those boxes that we want them to be, as opposed to what we realistically think they're going to be. But I'll leave that one for now. The second one, and Teresa's touched on this, is I'm just a bit confused. In the Deloitte report, the value for money issues within children's services, reading the narrative about that, you know, it's about quality assurance, about further improvements needed in relation to child exploitation, in relation to using unregistered schools, and obviously this is primarily something for children's services scrutiny, I think, rather than here. But what confuses me is that this appears under value for money, whereas it feels qualitative as opposed to quantitative.
Okay, thanks, Claire. Ian, do you want to come back on that as it's a comment on your report?
Yes, thank you, Chair. I think, Councillor Sutton, the first thing is to point out that our report is kind of backwards looking. It looks at the year ended 31 March 2020. So the service obviously, you know, is current, and they're living with where they are today and some of the, you know, the improvements that they've already made since that date. So we're a bit backwards looking. Yeah, we're looking at the arrangements in that case. There is obviously a qualitative element to it, which you pick up through the finance side of things, as you've said. What we do there is obviously track to make sure we think the expenditure as recorded in the accounts is reasonable. But it is in terms of the arrangements to secure value for money, which includes the financial side and the non-financial arrangements, where we do pick up the sort of service quality issues that are raised through some of these reports and the work that's ongoing. I would also add, if it's helpful, those demand-led pressures on budgets. You know, if I looked at most councils across the country, those are where the overspends are occurring, are in social care, both adults and children's, and are typically of the order that, you know, we see here. So it's not unusual or unique to Dorset. The complexity of forecasting demand is one of the big challenges to local government at the moment. So I would just add that from a sort of national perspective.
You okay with that, Claire?
Yeah, fine. Just to add, no criticism of Teresa and her team whatsoever. I think they're doing an amazing job. It was just where this is being picked up, really, I suppose, was my point. Thank you.
Thanks, Claire. Councillor Biggs.
Yeah, I'd like to pick up very much what Councillor Sutton has said, and has said numerously over the years, previously on Dorset County Council. This business about estimating is really difficult, and how we deal with it. You know, it is demand-led. We know the reasons why, but I think in 20 years, I don't think it was ever overestimated. You know, it was always more that, you know, whatever you put in, it seems to be expands it to fill the budget that you've given it. So that there's something a bit odd there. But yeah, it is wider issues, and I guess you know, the cuts to care and the fact they used to deal with moderate needs, high needs, then it went to, you know, only dealing with people with severe. Those are the knock-on effects, and that is basically, you know, a government issue that needs to be addressed, and they keep kicking the can down the road. So I don't know how we deal with this one. I always think there should be some way of separating out the accounts. We just have this one blob for adults, for children, and we always need that demand-led budget separate, so we can see, you know, did adults and children do fine on everything else, which I think I'm pretty sure they have kept within their budgets and sometimes go under. But it's just this demand-led distorts the whole thing, and whether that should come out of some central pot, almost like a reserve. I don't know if that's even possible, but just pass that comment really. Thank you.
Thanks, Richard. Aidan, I don't know if you want to make a comment on that. I mean, I've heard other members make similar comments to Councillor Biggs. It's almost that you need to have a base budget for those two services that we look at, and then there is that extra pot that then deals with the uncertainties which come with those two service lines. So do you want to make a comment?
Thank you. Yeah, I'll make a quick observation that yeah, clearly the for example, the £114 million budget summary in adults, there's lots of detail beneath that in our finance systems, ranging from staff costs, but the through to sort of anything else. The volatility is around the commissioning. It's when we buy services depending on the need and the number of individuals that are needing that support. I think that level of detail is monitored by officers. We don't necessarily aggregate. We aggregate it up when reporting publicly here. I'm sure it's if the audit committee wanted to drill down to those budgets a bit more, that's something that we could provide the information for. I think the key point is, though, that if the demand's coming through the system, we've got to find a way of meeting that demand when it's there, and the strategies that both adults and children have is to try and get upstream to sort of prevent that demand occurring, or to divert that activity to provide early support, rather than sort of just having to waiting at the end, ready to provide the expensive support. So we've got details, we've got strategies, and that might be something the audit committee wants to look at a later date.
Did you want to come back on anything, Richard?
No, that's fine, thank you.
Thank you. Councillor Parks, you're next.
Thank you, Chairman. I just really wanted to touch on the liabilities of the council, and most specifically around the borrowing. So I'd say from the accounts, we've got approximately 180 million in terms of borrowing, 63 million as part of the Public Works Loan Board, which I fully understand and recognise that's probably good value for money in terms of our borrowing. But there's also 116 million under other lenders, and I just really wanted to get a feel for who those other lenders were, and whether they were offering best value to the council moving forwards, and whether there are any plans to either reduce or increase our borrowing as we move forwards.
Thanks, Mike. I don't know if that's a question for David Wilkes to answer.
Thank you, Chairman. Thank you for the question. Probably as a question for me to answer. The long-term borrowing that we have in the balance sheet for Dorset Council now is inherited from the predecessor councils, and much of it dates back probably best part of 10 years, if not longer. So there is, and that borrowing will be from a range of counterparties. So it'll be from banks. There are some banks in there, but there are also some, for example, we have some borrowing from BAE Systems from their pension fund. So there's a mixture there. I think we have some borrowing from Siemens in there as well. So there's a mixture of sources of that borrowing. We will look at if opportunities arise to refinance or to repay that borrowing, because much of that, as I said, much of that borrowing is kind of 10 years old or more, where long-term borrowing rates were higher than what they currently are, predate the financial crisis. So we do look at opportunities when they present themselves to see if there are opportunities to refinance, primarily by repaying the debt and taking out borrowing at a lower rate, or by sometimes we've been able to reduce the rate of interest that we pay by extending the length of the loan, etc., etc. Those opportunities do present themselves from time to time, but generally speaking, it's very difficult to get out of, if you like, some of these long-term liabilities without having to pay a premium to the lender for doing so, because clearly if we repay a sum of money to them now, they can't go out to the market and get the same rate of interest they did when they did 10 years ago. So in the last meeting that I came to, we presented the Treasury Management outturn report for last year. So, for example, we repaid two loans at £20 million, worth £20 million in the previous financial year. In terms of going forward, we have no immediate plans to take out any further long-term borrowing. We do have an expectation that we will need to borrow more money, but we would be looking to do that on a short-term basis from sort of periods up to a year, really, in which case interest rates now are extremely low, probably today probably less than half a percent to borrow money for up to a year. So we do manage that borrowing quite closely, and we don't take out borrowing unless we absolutely have to. But it is a product, if you like, of the predecessor councils, their own borrowing positions, but also the capital programs that borrowing had been used to finance going back many years.
Did you want to come back on anything there, Mike?
Yeah, if I could do very briefly, Chairman. Thank you for that answer, David. It's most helpful. I just wondered, you sort of mentioned that opportunities arise, but do we have a regular review programme in place for doing this? And if we don't, why not? And perhaps for the Chairman, I wonder whether at a future date we could perhaps look at our borrowing at one of our future meetings, please.
Do you want to come back, David?
In terms of reviews, in terms of Treasury Management, we employ a company called Arling Close as Treasury Management advisors. So they will, one of the benefits of using the advisor is that they will come to us when there are opportunities that present themselves to refinance our borrowing. So those opportunities do come through that route, generally speaking. There, if you like, there are our eyes and our ears in terms of what's happening out in wider markets. But more than, yes, perfectly happy to come back to a later meeting and then discuss in more detail.
Mike, perhaps it'd be a good idea if you emailed myself with your thoughts of what you would like that audit agenda item to cover, and then I can touch base with both David and Aidan and we can sort something out for you.
Yeah, certainly more than happy to do that. Thank you.
Brilliant, thank you. Right, as I don't see any other questions coming through from members, I'll do a couple myself. I don't know if this is one, Aidan, for yourself or to come back to another point. When you drill down into the figures, actually there's quite a lot of money which are being saved in departments by managing of staff vacancies and the ability to fill those vacancies. Have we actually got a overall cost estimation of what the council saved the previous year by not being able to fill posts?
Thank you, Chair. Yep, you are absolutely right that we have a number of posts that are vacant and therefore we don't spend against them. And that can be from reasons ranging from somebody leaves and then it takes us a while to recruit with them, or we might deliberately, if they do leave, we might deliberately take a period to see if we can operate without that person, without that post filled. So there's a vacancy there, and sometimes we struggle to recruit the right skills and talent to the organisation, and on occasion we have to bring in sort of agency staff as well to provide that support. I haven't got the figure to hand, but we can certainly look that out for you. But when we our last cabinet paper in October, the finance cabinet paper about budget setting for next financial year, we did talk about removing a number of vacant posts as part of the overall effort to reduce the cost base of the organisation. But we can certainly we'll pull through a figure specifically for you if that would help.
It would help, because it's quite interesting to me the sums which are involved, particularly in the answer that Heather Lapham provided to me. But also, I'm a little sad sometimes when it's a wet day, and I do check the Dorset for You website employment page, and quite often the jobs that we have listed don't seem to mirror the departments that say they can't get staff. And I think perhaps there is a bit of work there that needs to be done so that we can fully understand whether we need, as a council, to set up a type of training program or a graduate program to get in those types of staff that we need, but also to have a real understanding of our staff requirements, so that if we do need staff, they are actually advertised. I mean, why on earth we got positions which are not being advertised on Dorset for You just doesn't seem to sit right with me. So perhaps you can sort of talk with other members of the senior leadership team and perhaps come back to me on that. The other thing I wanted, Aidan, while you're on, there is a number of points raised in Ian House's report from page 25 onwards, which is sort of basically where Deloitte's think that the council could do better and could improve. I was wondering whether you would be able to, on either a quarterly or even a 6-monthly cycle, keep us up to date with how the council is doing against those ideas that Ian has brought forward, because otherwise they seem to get lost in time, and then the next thing you know, next year you're seeing comments further from Ian and his team and you're thinking, was that mentioned last time? Was it not? Why haven't we moved towards it? So if we could have that, is that possible?
Yeah, absolutely. We have a similar tracker set up for recommendations from internal audit, and we can certainly add in the external ones as well and bring regular updates to the committee. Yes.
Brilliant. Thank you, Aidan. I see another question has come in from Councillor Biggs.
Yeah, it's just another clarification, I'm afraid. On the notes in the financial statements on page 62, which is the exit packages, there's a couple of high value prices, nearly £1 million each, which are not compulsory redundancies, and I'm not clear what they are. I wonder if you can clarify that, please, somebody.
Is that one for you as well, Aidan?
Yeah, can I just check? So I'm looking at page 62 of the accounts, section 19, or exit packages and termination benefits. Is that the one?
That's correct. The first box.
The first box, yeah.
The line that says other, and there's two at the bottom, high value, 938,000, 986,000 something.
Yeah. So yeah, 2 individuals leaving there, and the final and single line there for the 986. So these were redundancies that were made as a consequence of bringing the councils together as a whole convergence activity, and the figures do include the cost of the pension strain, because those, as you can imagine, the higher value exit packages are for senior people, and depending on their age, depends on how much the strain, how much the additional cost to the pension scheme is as well. So yeah, those were former senior executives of predecessor authorities that left through in the early part of the 2019-20 financial year.
So that doesn't take part of the compulsory redundancy fee, then that's separate, is it? And the pension is classed as separate?
Let me just read. I'm not.
Doesn't show anything in the compulsory redundancy column, but it does in the other.
Yeah, not offhand. I'm not quite sure the distinction between the compulsory redundancy and the other. I'm not sure if a colleague could comment on that.
Yeah, Aidan, I'll comment on that. It's an interesting observation, Councillor Biggs. Can we take that one away and just check that our analysis is correct, and understand why they're in the other column rather than compulsory redundancy column? But the substance of the arrangement was as Aidan has described. But we'll check those for you and let you know.
Thank you.
Thank you.
Right, members, as I see no other questions coming through, just from myself as chairman, I'd like to thank Jim, Aidan and all the respective teams for all the work in producing this, and also to yourself, Ian, and your crew down at Deloitte's for producing this, and we hope to see the finalised versions through as soon as can be sorted. Members, you will note that we got 5 recommendations for this. Numbers 1 to 4 are to note. Number 5, we're having to adjust slightly because of the final audit not being ready for us to sign as yet, because as Ian explained, there are a few bits of other work pieces to do. So actually, the proposed amendment now for item 5 will read to delegate authority to the chairman of audit committee and the section 151 officer to approve and sign the financial statements for the period ending 31st of March 2020. Once the external audit has been concluded, if the external audit identifies the requirement for any material amendments to the statements, these should be reported to audit and governance prior to signature. I hope that's all okay. So could I have a proposer for that, please?
Happy to propose.
Thank you, Richard. Seconder, please.
I'm happy to second.
Thank you, Councillor Cooking. What we'll do is we'll go through a roll call for and against. So I'm for, Richard proposed, Susan second. Councillor Rod Atkins.
For.
Thank you. Councillor Janet Dover.
For.
Councillor Barry Gorringe.
For.
Councillor Mike Parks. Are you there, Mike? No. Councillor Bill Pipe.
For.
Councillor Claire Sutton.
For.
Councillor Bill Trite.
For.
Thank you, that's passed. Yes, Fiona, we will email you through that amendment. Thank you very much. Agenda item number 6, is that over to you, Aidan, for a quick comment?
Excuse me a second. Remind me, can you just remind me what agenda item 6 is?
It's the audit letters.
Audit letters. Thank you. Sorry. Yeah, I think so. We've received the update from Ian at this point, and as we say, we expect to receive the final letter in the next, certainly before the end of November, to enable us to sign off the accounts as we've just agreed. So I think we've sort of unless there's any other final comments, we can take that as complete. That's agenda item, and to thank our external auditors.
Yes, we don't need to vote on that, Aidan, do we?
No.
No, right. Okay, agenda item 7, just before we move on to that, members, in conjunction with speaking with Democratic Services, after agenda item 7, we will have a 5-minute comfort break. So agenda item 7 is Banking and Treasury Management Update. That's over to you, David Wilkes.
Thank you, Chairman, and I hope everyone can make it through this to the comfort break successfully. I don't intend to go through the report in detail, but I'll highlight a few key points and I'll do my best to answer any questions that you may have. So the Council follows the SIPFA Treasury Management Code of Practice, which means that we need to produce an annual Treasury Management Strategy approved by full Council, and then we produce a mid-year update, which is this report, and an annual review compared to the strategy which we produced at the last meeting that you had. At the last meeting, you also asked if we could produce an update on the transitions of banking services to one provider, and this report covers that request. So it will be no surprise to anyone to hear that the biggest factor on our activity on the year to date has been COVID-19. It's had an impact operationally in terms of how the teams work, so we've had to move very quickly from being an office-based service with quite a high dependency on paper to working remotely, and I'm very pleased with the way that my team has been able to respond to that challenge, and that we've been able to continue to provide the services that we do. It's also had a big impact on the cash flows that we manage, so we've seen more expenditure, day-to-day expenditure on things like PPE and support for the social care sector, and we've also seen an impact in terms of the income that the council collects in from council tax and business rates, and also from car parking in the earlier period of lockdown. We've also, as part of those cash flows, we've had grants from government to the council to help with the pressures that the council's had, but we've also had to administer central government support for local businesses as well. So central government have implemented various schemes to support local businesses. The money has then come to the council, and then the council was then redirected that out to local businesses. So that's had a big impact in terms of the cash flows, the size of the cash flows and the complexities of the cash flows that we've been managing. COVID's also had an impact on the wider economy and financial markets that we operate in, the external context. So we've seen falls in the values of investments, we've seen increases in the value of investments, we've seen falls in the return on investments, and we've seen the falls in the cost of short-term borrowing, and we've seen the cost of longer-term borrowing creeping up. In the report, I highlight that the outlook for markets is volatile, and I think just to underline that point, it's been probably 2 weeks since the report was written, and in that time we've seen the introduction of the temporary lockdown in England, we've seen the extension of the furlough scheme through to the end of March, and we've seen the news about the progress in developing and distributing a vaccine. So all of these things are impacting on markets positively and negatively, depending on which one they are. So, and we see that volatility, and our advisors see that volatility continuing through, certainly for the remainder of this financial year. Besides COVID, we've also got we've seen the impact of US elections, and we're also continue to see the markets reacting to the talks between the UK and the EU in terms of trade and other future arrangements, which we anticipate coming to a head at the end of this calendar year. So all this means is that we've had to continue to monitor our cash flows very closely, and also it's had impacts in terms of the expectations for our investment income for the remainder of the year. If I move on to banking, I don't know, Kerry, if you can move forward to, I think it's page 127, paragraph 18. Thank you. So as the report says, the predecessor councils all had different banking arrangements, either with NatWest, HSBC or Lloyds Bank. And clearly this was not the best way to operate for the new single organisation. So we conducted a tender exercise, which NatWest was successful in winning, and we're now in the process, or have been in the process, of moving all the legacy arrangements that we have with HSBC or Lloyds across to NatWest. We moved across all accounts payable and payroll relatively quickly and straightforwardly. Huge amount of work in the background from colleagues in those services and from IT colleagues, but actually relatively straightforward. We're now focusing on revs and benefits, so getting all of that banking activity moved across to NatWest. And we always knew that was going to be the biggest challenge in terms of this transition, and we haven't been disappointed in the level of challenge. We are on track to move across the activity relating to what was the ex-Purbeck District Council, West Dorset, and the Weymouth and Portland Borough Council in December and January. We're expecting to move across all of that activity into NatWest accounts. The situation with East Dorset and North Dorset is more complicated in that those are currently administered by the Stour Valley and Poole Partnership, and we're in discussion with them to agree the best time for them to be transferred across. But we think that's likely to fall in with the end of year processes and the billing processes. And that was a quick run through in terms of the report. Happy to take any questions.
Any questions, members? If anybody's thinking of any, can they put it RTS in the sidebar? David, could you just explain a little bit more about the LEP balances, which are in one of the tables, please?
Yeah, the LEP has its own bank accounts, but they form part of the, as Dorset Council is the administering authority for the LEP, they form part of what's called the interest group that we have with NatWest. So the agreement we have with NatWest is that we have a nil overdraft limit with NatWest, but individual accounts within the interest group can be in credit or they can be overdrawn.
Right.
And the LEP balances are included in that interest group.
Okay.
So I think we've previously referred to it as commingled balances, and I've tried to explain in the footnote to put a bit more flesh on that, to explain that they're part of the interest group, the NatWest interest group.
Okay.
So the LEP could have, say, for example, £20 million in hand. The council's other balances could be £20 million overdrawn, and that would still be acceptable to NatWest.
Okay. With regards to the borrowing position in table 3, and I think this goes back to what Councillor Parks was mentioning earlier. You know, we've got the listing of all the borrowing, but we don't, as a committee, know quite what interest rates we're paying, how that favours in the market, whether certain rates are, although they may look higher, are acceptable because they're over longer term. So perhaps that's something that we can work on as a presentation for a later date.
Yes, happy to do that, Chairman.
Thank you, David. Councillor Biggs, you have a question.
Yeah, it's a bit of a speculative one. We never discuss insurance. I don't know where that sits. I mean, many of us be aware, obviously, of the big fire in Chickerell, with numerous vehicles destroyed, and they're about 185,000 each. You know, I'm just wondering, where does our insurance sort of risk sit? How is it reviewed? You know, what are sort of overheads on that, and risk of, you know, having undefined, you know, excess, etc., and the risk to, you know, insurance tax and things like that. Where does that sit in the overall picture, I wonder?
I don't know if Aidan or Jim wanted to.
Shall I comment on that briefly, Councillor Biggs? Useful timing for the question, and it's probably something that I'd suggest we add to a future agenda for Audit and Governance Committee, so you understand it correctly. So one of Councillor Gorringe's questions earlier was, can we have some analysis of our reserves? Yes, absolutely you can. There's quite a significant amount of money put by in the balance sheet for insurance reserves. So we provide for an awful lot of, we self-insure to quite a large extent. I'm not going to, I think it's $500,000, but I'm not absolutely on top of those figures. So anything in excess of $500,000 for certain classifications of claim would go to the insurer over and above the amounts that we insure ourselves. So I could throw some numbers at you, but I'm not absolutely sure they'd be right. But we do have quite material insurance reserves ourselves to pick up those claims where we self-insure. That is reviewed annually. The insurance team is and our provisions are reviewed independently as well as by swap, and Ian House, although he's left, I think they have a light touch review of the insurance provision as well. So if you're talking particularly about this claim, the claim that we're likely to have as a result of the weekend's fires, you'll probably find that we have to underwrite the first chunk of costs, and I'm going to stick my neck out and say I think that'll probably be about $500,000, and the excess will come through an insurance claim. So we can ask Dave Watson, once he's finished dealing with all of the actual work involved in this, to come to Audit and Governance and give you an update on our insurance arrangements, because it won't just be about this. There'll be a whole load of other risks that we either self-insure or then take out policy on top of that for. But yes, if we add that to a future agenda, that'll be interesting area for you to explore, I'm sure, as well as lots of the claims that we actually receive and those which are successful versus those which are repudiated. There's a whole load of statistical information that we keep and report internally around that too.
Did you want to come back on anything, Richard?
Yeah, that would be really useful. I know in Dorset County Council used to get reports of the claims, for slips and falls, which can be quite expensive and damage to vehicles and potholes and things like that. I know we're obviously getting into sort of quite small sums of money sometimes, but just an overall picture. But I think certainly from the risk perspective, whether we're under or over insuring, taking that balance is something that we need to consider. These big value, thankfully very rare events, that it can be quite frightening, the scale that we could be exposing ourselves to. Thank you.
Jim, following on from that, because I've literally already had 7 messages come through to me, which from elected members, all saying self-insure ! I think we could perhaps do with some form of add-on to the report that you're suggesting, the whats and the whys and the hows around the self-insure system, so that members are aware. Is that all okay?
Yes, it is. I suppose just some context around that. As part of the predecessor councils coming together for Dorset Council, we did have there was a procurement exercise to once we had worked through, as part of the remit of the Dorset Finance Officer Group, what our insurance requirements were going to be, because we were each in different insurable positions prior to us coming together. So that was something that I think did go before Shadow Cabinet and Shadow Council in terms of this is how we will do our insurance arrangements. But rather than not give you the full facts, I'll ask Dave Watson if he'll pull together a report which summarises our journey and where we are now.
Brilliant. Thank you, Jim.
No problem.
Any other questions, members? I'll take the silence as a no. This agenda item is just to note, and we've made the necessary comments. So thank you very much, David, for the presentation. Right, members, it's literally just ticked over 11:50, so if we could reconvene back at 11:55, please. Leave your computers, tablets on, just turn your microphones and cameras off until you're back, please. Thank you. Right, members, welcome back. Let's see whether we've all come back. So, Councillor Biggs, yes, I can see your video is on. Councillor Cocking. Councillor Adkins.
Yes. Sorry, I am here, Chair.
Thank you, Susan. Councillor Dover.
Yeah, I'm here.
Councillor Gorringe.
Here.
Councillor Parks. Councillor Bill Pipe.
Present and correct, Chairman.
Councillor Sutton.
Also present and correct.
Councillor Bill Trite. Okay, hopefully they can join us shortly. Right, members, next agenda item is agenda item 8, which is an EU exit update. Unfortunately, we heard this morning that John Selgren has had a family bereavement, so we will be moving on very swiftly with this. You have the report in front of you. You've had this since the agenda was published. If you have any questions relating to this agenda item, can you please forward them on to John Selgren, and I'm sure he will answer them when he has an appropriate time to, bearing in mind family circumstances. Thank you. So now if we can move swiftly on then to agenda item number 9, which is constitutional changes. Jonathan Mayer, I think this is over to you.
Thank you, Chairman. If I can draw members' attention to one use of my delegated power to make changes to the Constitution. Members will recall that I have delegated authority to make changes, including where they're necessary to provide alignment with existing or emerging internal practices and changes to our procedures. When we established the new overview committees and the new scrutiny committees, the terms of reference of the overview committees included responsibility for monitoring the performance of services in accordance with targets in our corporate plan. Following discussions with the chairs of the 2 overview committees and the 2 scrutiny committees and yourself, Chairman, there was agreement that really monitoring of performance shouldn't sit with the overview committees, it should sit with the scrutiny committees. And so reflecting that agreement between the chairman, I will be amending the Constitution and moving performance monitoring from overview to scrutiny. And that's the only change I have for you.
Okay, Jonathan, do you need us to vote on that?
No, Chairman, I'm simply reporting to the committee the exercise of my delegated authority to make that change.
Okay,
happy to take any questions.
Thank you, Jonathan. Do members have any questions? I'll take the silence as a no. Thank you very much, Jonathan. Moving on now, members, to agenda item 10, which is the Q2 financial report. I believe this is over to you, Aidan.
Yes, thank you, Chair. So we're at page 145 of the agenda here. So this is the Q2 financial report. So that's the expenditure and predicted forecast based on expenditure between April and September of this financial year. So this report was received by Cabinet on the 3rd of November. The report itself highlights an improvement in the position compared to Q1, and members of this committee will remember that last time we met we went into some detail examining the Q1 financial report. So by Q2 the position had improved significantly to a forecast overspend of 27.6 million. The reasons for that improvement in the position were not least we are sort of grappling with a world of uncertainty at the moment with COVID. So the assumptions about the amount of income that we were losing, we were able to revise those down. Some of our expenditure that we had incurred in the early part of the response to the pandemic had started to taper off. And in particular, government funding has been made available to us, additional government funding. So those factors enable us to report a predicted improvement in the position. So at that stage, a forecast overspend of 27.6 million. And I'm pleased to be able to report that the position does continue to improve at the moment, although we've entered a lockdown 2 since the report was received. We have had further announcements of funding from government, and the position does continue to improve. So our worst fears that we outlined at the beginning of the year haven't quite materialised, but nevertheless we're still reporting a really significant overspend, which we're having to underpin by reserves, and we had a conversation in the previous agenda item that described that. So in a moment I'll hand back to you, Chair, to guide us through any questions that members may have about particular areas of overspend or underspend within the report. But the other area I just really want to highlight is I guess it's the paradox of finances when dealing with COVID. As a council, the money that we control directly, that's where the expenditure pressure is. That's where we're incurring the overspend. We are, in addition to that, though, receiving significant funding from government in order to pass on to others, so money that flows through us. And so, for example, business grants that we've received, funding for winter pressures, funding for rough sleepers. We've received an additional tranche of business grant funding, and we've gone live for that. So any businesses that have had to close as a result of the second phase of lockdown restrictions, businesses are able to claim for that from our website. But so far, government funding that's passed through us is totaling onto it's about 170 million and rising. So a busy time in finance. The expenditure is a particular concern in response to COVID. It's detailed in the report, but it's also just worth being aware of the money that's passing through us, in particular for COVID response as well. So if I could hand back to you, Chairman.
Thank you, Aidan. Councillor Sutton.
Thank you, Matt. It's a forecast overspends again. So adults and children's forecast at 12% and 10% as things stand at the moment. So really quite similar to last year. But what's really jumping out is that the forecast overspend in place is significantly larger than that at 21%, and the forecast overspend in legal and democratic is 57%. So obviously a bit of narrative about why those are so large would be really helpful. Thank you.
Aidan.
Thank you. Yes, I can give headlines, and if officer colleagues want to supplement those, if members request it. So we've, as we discussed last time, pressures in adults and children's, in particular, ranging from additional demand. We had to pay, for example, in the adults sector, higher prices in order to secure care placements for people coming out of hospital in order to create space for the COVID treatment within hospital. So that's a significant pressure. And as we discussed earlier, for example, within children's, we've had a few high cost cases come through, and that has a really significant impacts on our budgets. If you take, for example, the legal and democratic services, currently the costs of, I think it's some of the costs of PPE, and in particular the storage in case of excess deaths facilities. So that's a significant amount that has been charged against legal and democratic, and the reason it comes out at a high percentage is because the legal and democratic budget is relatively small. And then finally, within place, that area was hit in particular. It was a loss of income from, for example, car parking charges. Because you remember in the early stage of the pandemic, we closed down our car parks, although that hasn't been the case in the second wave. So the report itself has a little bit more explanatory narrative to explain those figures, but if members want more detail, then we've got colleagues on hand on this call that could provide that if required.
Did you want to come back on anything, Claire?
Yeah, just quickly, that's extremely helpful. From a member point of view, as I'm sure officers are aware, you know, like you, we're constantly under pressure to be agitating for more money to be spent on this, for more money to be spent on that in our particular wards. And obviously, you know, we respond, or I respond, I'm sure other councillors do the same. You know, we're trying to manage expectation, particularly at this current moment in time. But you know, for the general public, sometimes they just don't really get it. You know, they think that Dorset Council has loads and loads of money, so why can't you, you know, fix my pothole, etc. So I suppose, I mean, this is slightly off the point in a way, but a little bit more friendly narrative, which enables us to go to our residents and say, look, I'm really sorry, but that's not going to be a priority for these reasons, would actually be quite helpful at some point.
Do you want to come back, Aidan?
For us?
Yeah, it's really helpful feedback. Anything that we can do to help the public and to help members understand the finances is, you know, more than willing to do, because it's really important that people understand it's taxpayers' money. Where does it go? Where does it get spent? There's 2 points I'd make on that. First of all, just relating to an earlier conversation we had, Jim outlined how part of the forecast overspend relates to the fact that we think we'll be under collecting business rates and council tax by about £13 million this year. And that's clearly, as we've discussed, that's a reflection of the fact the economy has taken a pounding. Businesses haven't been able to trade, aren't necessarily open. And similarly, people are unable to pay their council tax. For example, they may have lost their jobs. So there's consequences that are flowing through. The other area I just sort of highlight on the side that have talked over the months, and is sort of a national coverage as well, about this the Section 114 notice, which is the local government essentially the device of announcing that essentially a council has gone bankrupt. Dorset Council is well away from that. Is sort of not in that not in that arena at all. And as you've seen from the accounts, we're in a relatively healthy state financially, although this year in particular got significant overspend. But only last week, Croydon, London Borough of Croydon Council did declare a Section 114 notice, and you know, it's a real reminder to us all that we do have to take responsibility for managing our finances. We've got finite money, and we have to, as politicians, you have to take very careful and cautious decisions about the priorities to do that. And it's my role to help present those options in a very clear way, and more than willing to try and make it more user friendly. Thank you.
Thank you.
Thanks, Claire. I'm not seeing any other questions coming up at the moment from members, Aidan, so I'll go through mine if you've got a spare few minutes. 9.2, predicted level of overspend 27.6 million. Do we have any early indications as to whether the second long lockdown will have an adverse effect on that number? And do you have any specific figures as to how much of that is actually service as normal and what is actually COVID related?
Yeah, thank you, Chair. Your second question first. If you look at page 148, I think we've got a little bit of analysis there about trying to draw the distinction between COVID and business as usual levels of overspend. Now, we have to be really cautious about that, because it's not, there's a degree of judgment, because there's a complexity of the interdependence between those. But we've done a sort of a high level analysis there to give you a flavour of where the pressures relate to business as usual compared to the COVID response. In terms of,
I was just trying to tease out of you how accurate you think those figures are currently.
there's a degree of judgment. It's our best judgment about that at the moment, and only sort of once the dust settles at the end of the financial year, because for example, there's an element of knock-on effects. Let me just give you an example of it within adult care. So we had to put our care prices up at the during the height of the pandemic to be able to secure sufficient capacity in response to COVID, and those care prices have now, during that intense period, has stepped away. So we've been able to reduce our care prices again, the amount that we pay, but not as much as haven't been able to set them back to normal. So how do you distinguish then? Is it the higher cost than we were anticipated? It's not a direct consequence of COVID, but it is an indirect consequence. So we've tried to tease that element through, but I think this gives you a ballpark sense here that the majority of the pressures we're experiencing are COVID related, but we do need to keep a very strong hand on the business as usual savings as well. In terms of the first part of your question, have we done any modelling about the impact of the second lockdown? The financial position continues to change, as I mentioned, because not least government is providing additional funding. We received a number of announcements last week, for example, around winter pressures funding, and there's a possibility of rough sleepers funding as well. So we are getting indications of new money coming in. In terms of the level, the key variable for us is the one we've touched on: business rates and council tax. Is the lockdown 2 really going to have a further impact on that? I guess if it depends if the second lockdown goes on beyond early December. If it's extended, then I think we'd start to have to revise our figures. But in the meantime, we think we've got enough sort of cautionary estimation to take account of lockdown 2. But you know, this we are in a world of uncertainty, so we're having to use our best judgments at this stage.
Okay, thanks, Aidan. Next question might be for you, or it might be for Tony Meadows. 11.4, I quote, "There are £2 million worth of savings which are forecast as being unachievable this year." How do I phrase that? Is that all of the savings plan is unachievable because of the events, or are we still thinking we can achieve some savings within the financial year within that service?
Thank you, Chair. I'll pick that up. Although my screen just went black for a moment, which did fill me full of horror. The situation as it stands in terms of the £2 million worth of savings were obviously significantly impacted through obviously transformation not being able to take place, shall we say, or some of the planned transformation in terms of due to COVID. So that was a significant barrier for the service from that point of view. Where there are efficiencies that we have been able to make in terms of utilisation of certain services, changes that we can make in the way we deliver, those have been made. So there will still be savings achievable in year, but the 2 million effectively is the shortfall from the planned savings that we had predicted. But in terms of, obviously, we've got a savings plan that's in place to deliver circa sort of 14 million over the next 2 years, and we're also bringing as much of that forward as possible. I think the other thing, just to follow up on some of the other points that were raised, which is also relevant, we've gone through a significant amount of change as a integrated care system over this period, which also has impacted. So many members will have been part of conversations in various settings talking about Home First and how we are supporting the system to get people out of hospital sooner, to relieve the pressure. What that has meant, though, is potentially we're getting people with higher levels of acuity. So they're coming out with more complex needs because they're coming out sooner and earlier in their recovery. And also, because we're not assessing people until later, that means that from a workforce point of view, we're having to divert a lot of energy into supporting that system. A lot of this, where you'll see previously comments around the Better Care Fund, a lot of the work around supporting discharge was previously part of the Better Care Fund plan, still is. However, that's been rolling forward as opposed to being refocused. Yet you've had a system change in year, so it's not truly reflected the increase in sort of activity and cost. So again, increased workflow, lots of things in track where we know that we can be making a difference, and a lot of it really is about how we can, as a system, take that responsibility, and obviously making sure that the council, yes, is supportive and part of that, but also that is risk sharing some of that with the broader system as well, which is really, really key to both in-year and future savings.
Thanks, Tony. While you're on, another question which I just want some clarification on, which is to do with 11.7, which is about residents who are coming out of hospital that wouldn't normally receive council funded care are because of the pressures on the hospital system. Can you just confirm whether we are or are not receiving extra help for those residents?
So we are receiving additional help, well, we're not receiving it directly. The Dorset CCG is receiving a set of funding to support hospital discharge. It's basically allowing for people to be discharged and be funded for support, whether that be in their own home or on a temporary basis in a residential setting to get rehabilitative support, etc., for the first 6 weeks. So from that point of view, we have got that support in place and that finance from that point of view, and to be able to recover against any costs incurred. I think the word of caution is obviously, again, this is relevant to this Better Care Fund point that I've made previously, that it's what happens after 6 weeks, because the reliance is upon having the whole system working. So obviously some of the treatments and the support that people would have been receiving in hospital before they were discharged now need to take place in the community. And the success of that and the availability of that determines the outcome for that individual in terms of can they return home within that 6 weeks, or are they going to need to be in a residential setting at a higher cost beyond that. So if the right support isn't there, there is that risk that that liability could end up falling to the council. And that is obviously something that I personally am very keen to avoid. And working through with system partners how we manage that. So a lot of that is just making sure that the right care and the right support and the right rehabilitation is taking place at the right time. Otherwise, there could be an issue.
Thank you, Tony. Much appreciated. Final question, Aidan, back to you. It's a question that I asked at the Cabinet and wasn't able to get a answer at the time. 13.6 refers to the cost of agency staff. So how much extra do agency staff cost us compared to the normal hiring market? And I think this is quite an important question to tease out here, because we're often looking at numbers with regards to agency staff and the costing to the council, but we need to have that in relation to how much extra it actually costs us compared to normal.
Yeah, thank you. And this very much relates to your earlier question, doesn't it, about the use of vacancies and workforce in general. I'm sorry if we haven't come back to you with, because you did ask that question at Cabinet and we assured that we'd provide you with some numbers around that. And I'm sorry we haven't done that so far. So if I can do a little chase of my team to get those numbers, and we'll send them to you, Chairman.
That would be great. Thank you, Aidan. That's it for me. Next question is from Councillor Cocking.
Thank you, Chair. My question is really more to do with town and parish councils, and it's 16.9 on page 159. I know it might be a bit like a crystal ball, but do you know how much less town and parish councils will get from the collection funds, because and the date that they will know by? Because at the moment we're all talking about our own town and parish councils budgets and preset setting. So I just wondered if there was some clarification around the date that the councils would know and how much less they're likely to get. But I don't know whether you would have those figures now or when the date would be that you would have them by.
Aidan?
Chair, I can comment on that if you like. It's Jim McManus.
Okay, Jim.
Interesting question, Councillor Cocking, thank you. So this year, although the deficit on the collection fund we talked about earlier around 13 million, town and parish councils are shielded effectively against any losses on the collection fund in year, but similarly if there are any surpluses they don't participate in the distribution of any surpluses. It's for the major preceptors, so police, fire and Dorset Council. In terms of setting, so this year is safe. In terms of setting next year's budget, what the yield is likely to be, part of that is about the decision locally about what size of precept members of town and parish councils decide to set. The bit that will inform that is important is the size of the tax base. Now we've done one piece of work already to submit to MHCLG our too many acronyms, the Ministry of Housing, Communities and Local Government. We've submitted what is called our CTB1, the Council Tax Base 1 form, and that showed that overall our council tax base was pretty much flat. It was actually a very, very small reduction, 0.02%. In terms of budget setting, the information that we give to town and parish councils and the figures that we use ourselves and police and fire are required by regulations to be extracted on the 30th of November. So we've worked with DA PTC to work out a timetable of when we'll be able to share information with them, and we're aiming for the 11th of December as the date by which we hope to be able to share information on what the council tax base will be in each of the town and parish areas. So we then require the budget setting work to go ahead, and those town and parish councils that are setting a precept, we've asked for their returns back by the 31st of January so it can all be included as part of the budget setting paper that council will review in February. So that's the timeline. We've shared that information with town and parish councils and with their association. It's as I say, the actual numbers that we've seen so far are fairly flat. If you asked me to speculate, I'd say they will probably reduce slightly further between the date on which there was that very small reduction and the 30th of November when they're extracted, but we'll share the information as soon as we're able to.
Did you want to come back on anything, Susan?
No, thank you, Jim, because I know it will affect you directly on Portland. So thank you. No, thank you for that. I thank you for the dates as well. That's handy. I know sometimes it has to be a bit flexible, but thank you.
Thank you both. Councillor Biggs, you have a question.
Yes, paragraph 19, we talk about capital expenditure and financing. I couldn't see anything about potential capital receipts, and obviously there's a lot of things about the negative effects of COVID, obviously, but there's also with home working, etc., there must be potential for significant savings. I know there's talk of whether, as an authority, we consider selling off one of our principal buildings, which I'm sure we know about. But that is, something I think we ought to be discussing, or at least what other properties as well are looking forward to receiving capital receipts. I wonder if that should be a mention. Thank you.
Aidan, Jim?
Yeah, if I could come in on that. So the Cabinet agreed, I think it was in October, the asset management strategy that took a comprehensive list of the assets that we've got that we currently own, and recognised that as we set up the councils, as the councils come together into one single council, we have got surplus properties for surplus buildings that we do want to dispose of. In terms of this financial report, we have very limited assumptions for this current financial year of property disposals, but there will be a plan coming forward over the coming months and years as part of our property rationalisation. And Councillor Biggs is quite right, we're not going to need so many offices in the future, particularly as the Dorset workplace programme means that we're going to spend less time working in offices and working more remotely. So there will be detailed plans coming forward. I think they'll be going through the various overview and scrutiny committees, and I'm sure there's a role here for audit to see, once programmes are agreed, to make sure that they have been implemented appropriately.
Did you want to come back on anything, Richard?
No, that's fine. Thank you, Matt.
Okay, members, I'm not seeing any more questions coming through, so that agenda item was to note and to ask questions, which we have done. Okay, move on to agenda item 11, which is the forward plan. Obviously, Fiona and myself will need to touch base with Aidan about bringing forward this regular update on the council's move towards the points raised by Deloitte. Myself and David Wilkes will get together to discuss Councillor Park's ideas with regards to analysing the council's borrowing, which will need to come forward to a forward onto the forward plan. Do any other members have anything on there that they would like to make comments on or that they would like to add to? Yes, Councillor Biggs.
It's only just to pick up on my comments earlier, whether we need a discussion at some point about our insurance strategy.
Aidan, how soon do you think that we could get a presentation sorted for that?
I think, where are we now? November. Yeah, I would have thought by January we could certainly give an overview of the approach we take and the sort of insurance claims, that things we claim for as well as claims we receive. So yeah, January is possible if there's room on the agenda for that.
I think there is. So if you could take that away and work on that and come back to Fiona and myself to see whether we can work that in, and if not, we'll have to move it to February's.
Yeah.
Okay, that's brilliant. Thank you, members. No other comments coming through. Agenda item 12 is urgent items. I'm not aware of any. Fiona, is there any?
No, no urgent items.
Okay, members, that is the end of today's committee meeting. Thank you, and thank all officers for your input and your time today. Really appreciate it. Thank you very much. We obviously don't have a meeting now until January. I know it's very early to be saying this, and I usually shoot people who say this, but I wish you all a happy Christmas and take care and be safe. Thank you. Take care. Bye.
Thank you.
Thank you, Chairman.
Thank you.
Bye.
Bye.
Bye, everyone.